Welcome to the Radio Revenue Podcast. Hello, and welcome to the Deep Dive, the show where we sift through a mountain of information to bring you the most critical insights, giving you that shortcut to being truly well-informed. Today, we're plunging into a fresh financial filing. It's a Form 10-K from Lamb Weston Holdings, Inc. that just hit the wires on July 23, 2025. Now, a 10K, it might sound like a pretty dense, jargon-filled document, but trust me, this one is packed with fascinating details about a global industry that, well, touches all our lives. Our mission for you today is to cut through that corporate speak, highlight the surprising facts about this major player in the food world, and explain what their year tells us about the broader economic landscape. Joining me, as always, is our expert guide to help us navigate these waters.
It's great to be back. You know, a 10K, especially from a company like Lamb Weston, it's really so much more than just a financial report. It's a fantastic lens, actually, through which to view the intricate dance of global trade, commodity markets, consumer shifts, and, well, how a massive corporation like this adapts to constant change. What I find particularly fascinating is how seemingly small details, sometimes buried deep in the footnotes or the management's discussion section, can illuminate really significant operational challenges, strategic pivots, and even broader macroeconomic trends. It's like finding clues to a much bigger story.
I completely agree. So let's unpack this, Lamb Weston. Most of us have probably eaten their products, maybe without even realizing it. But who exactly is Lamb Weston, and how truly massive are they on the global stage?
Well, Lamb Weston is a behemoth, really.
Yeah.
They are a leading global producer, distributor, and marketer of what they call value-added frozen potato products. And when we say value-added, we're almost exclusively talking about French fries. Seriously. Fries make up the vast majority of their product portfolio, whether it's the classic straight-cut, waffle, curly, or even those, fancy seasoned varieties.
Right, the fries.
Their headquarters are in Eagle, Idaho, and they trade on the NYSE under the ticker symbol LW. Position-wise, they hold a dominant market position, #1 supplier in North America, which is obviously a huge market in itself, and also a leading international supplier, particularly expanding aggressively into high-growth emerging markets.
High-growth emerging markets, that sounds incredibly strategic. How do they even begin to organize such a sprawling operation across different continents and, well, vastly different consumer bases?
Yeah, it's complex. They structure their operations into two primary reportable segments to manage that global footprint. First, you've got North America. That encompasses the U.S., Canada, and Mexico. This segment handles their well-known proprietary brands like Lamb Weston itself, grown in Idaho, Alexia, and also licensed brands from major North American restaurant chains, plus customer labels, too.
Okay, so that's North America. What's the other segment?
Then there's the international segment, which, as the name implies, covers all sales outside of North America. Here, it's predominantly the Lamb Weston brand itself, but also a significant portion of customer-labeled products for international chains or distributors. And their physical global reach is astounding. They have sales support operations in 32 countries.
32.
Yeah, and production facilities in 8 countries, including places as diverse as Argentina, Australia, Austria, Canada, China, the Netherlands, the UK, and of course the US. That's a truly global supply chain.
32 countries with sales support, production in 8. That's an incredible footprint. It makes me wonder, given that scale, who are the major customers for all these fries? I'm picturing like every fast food joint and restaurant in the world.
You're not far off, actually. They indeed serve a very diverse customer base, ranging from quick-service restaurants, think your McDonald's or Burger Kings, to full-service restaurants. Massive food service distributors who supply countless eateries, and even directly to retailers for the frozen fries you buy at the grocery store.
Okay, so pretty broad.
But here's the interesting part, and it kind of highlights a potential vulnerability. Despite that broad reach, they have significant customer concentration. Their top 10 customers collectively accounted for approximately 50%, half of their net sales in fiscal 2025.
Half their sales from just 10 customers? Wow.
Exactly. And their single largest customer? McDonald's Corporation. McDonald's alone made up a whopping 15% of Lamb Weston's consolidated net sales in fiscal 2025.
15%. Just McDonald's.
Yep. And that percentage has actually been trending up. It was 14% in fiscal 2024 and 13% back in fiscal 2023.
Wow. 15% of your entire business tied to one customer, even a giant like McDonald's. That's quite a dependency. It really underscores how much of, your favorite restaurant's menu might rely on just a few major suppliers like Lamb Weston. A shift in even one major chain's strategy or a hiccup in their supply to McDonald's could send pretty significant ripples through Lamb Weston's entire business model. Speaking of ripple effects, let's turn to some of the specific headwinds they faced in fiscal 2025. The report details a pretty significant shift in their financial performance. What were the biggest challenges?
Or a major factor, and one we've seen across many industries really, was the persistent increase in costs for their primary raw materials. We're talking about everything from the potatoes themselves to edible oils, packaging, grains, starches, and energy inputs. All of these saw low single-digit price increases, sort of a subtle but constant squeeze on their margins.
Right, death by a thousand cuts almost.
Kind of. But beyond those raw materials, they also saw a rather dramatic surge in transportation and warehousing costs. Those increased in the low double digits.
Low double digits, that's significant.
Very. This was partly due to higher warehouse inventories they were holding, which adds to storage expenses, but also just the overall inflationary environment in logistics we've been seeing.
So increased costs across the board, but especially in moving and storing their products. Were there any specific, major financial hits that stood out in the report?
Absolutely. While some of these increased costs were partially offset by what's called labbing, estimated pre-tax losses from their ERP transition in fiscal 2024, meaning they weren't incurring those specific losses from the previous year's system overhaul anymore.
Okay, so that helped a bit.
It did. But there was a very significant kind of one-time charge in fiscal 2025. Lamb Weston incurred an $85.1 million pre-tax charge specifically for writing off excess raw potatoes.
$85 million. Just for potatoes they couldn't use? That's incredible. What happened there?
It's a stark illustration of the delicate balance in agricultural supply chains, isn't it? This charge was directly due to an oversupply of potatoes, basically a bumper crop combined with softer restaurant traffic in fiscal 2025.
So too many potatoes, not enough demand.
Exactly. So you have more potatoes than anticipated and less demand from their customers, leaving them with this surplus they just couldn't process or sell before spoilage. It really forces you to question, how do companies in an agricultural commodity business truly hedge against that kind of volatility beyond just, writing off inventory?
Yeah, that's a tough one.
It highlights the challenge of perfectly aligning agricultural yields with fluctuating consumer demand.
That makes perfect sense. This sounds like managing the supply chain was a huge hurdle, especially with fresh produce. Were there any specific incidents that stood out beyond just general cost increases?
Indeed, the reliance on third parties became a very critical point. For instance, back in April 2023, there was a significant cyber incident. It occurred at Americold Realty Trust, Inc., which is a major finished goods storage provider for Lamb Weston.
Oh, right. I remember hearing about that.
Yeah, and this incident caused substantial delays in product delivery for Lamb Weston. It really underscores how interconnected and, frankly, vulnerable modern supply chains can be. A cyber attack on a third-party logistics provider.
Completely outside their direct control.
Exactly. Far removed from the potato fields themselves, can directly impact a company's ability to get its product to market. And on top of that, labor challenges continue to be a persistent issue for them.
Still, even now.
Yeah. They experienced shortages, increased overtime, and higher wage rates across their operations due to a tight and competitive labor market. The report also notes that approximately 30% of their employees are under collective bargaining agreements, and a substantial 65% of their hourly union contracts are either in negotiations right now or set to expire in the next 12 months.
65%. That's a lot hanging in the balance.
It is. This prevents an ongoing potential for increased labor costs and, possible disruptions as they navigate future contract renewals.
So from cyber attacks on partners to managing union negotiations, this isn't just Lamb Weston's story, is it? It's a profound window into the current global supply chain crunch and the labor market pressures that so many industries are grappling with today. It shows the sheer complexity of keeping those fries moving from field to plate. So facing all these headwinds, what does this all mean for their strategic response? They didn't just sit back and let things happen, right? And how did all these factors ultimately impact their financial bottom line?
No, they certainly didn't sit still. In response to these pressures, they implemented what they call the FY25 restructuring plan. This plan incurred a hefty $100 million in expense in fiscal 2025.
$100 million. Wow.
Yeah, and is specifically aimed at driving operational and cost efficiencies across their business. Think about optimizing plant layouts, streamlining processes, maybe reallocating resources. They also announced a new cost savings program in July 2025, just recently.
Another one.
Yeah, signaling a continued aggressive focus on optimizing operations and reducing expenses wherever possible. And on the technology front, they continue to integrate their new Enterprise Resource Planning, or ERP, system transition in North America.
Ah, yes, the ERP rollout. That caused some issues before, didn't it?
It did. An ERP system is basically a suite of integrated software applications a company uses to manage daily business activities, accounting, procurement, manufacturing, supply chain,
The whole shebang.
pretty much. And a transition like this is a massive undertaking. While it was later resolved, it did temporarily reduce their visibility into finished goods inventories and directly impacted sales volume and margins back in fiscal 2024. It clearly illustrates the inherent risks and complexities of major system overhauls, even for the most seasoned companies.
Okay, so strategic restructuring, new cost-saving programs, navigating a massive tech upgrade. What did all of this translate to in terms of their overall financial health for fiscal 2025?
Well, the numbers, they definitely reflect those significant challenges. Their net sales actually saw a slight decline, dipping from about $6.47 billion in fiscal 2024 to $6.45 billion in fiscal 2025. So pretty flat, but slightly down.
Okay, slightly down on sales.
But more significantly, their gross profit, which is sales minus the cost of goods sold, saw a pretty substantial drop. It decreased by $368.1 million to roughly $1.4 billion in fiscal 2025.
Ouch. That's a big hit to gross profit.
It is. And the net income, the ultimate measure of profitability, was sharply impacted. It significantly decreased to $357.2 million in fiscal 2025. That's down from $725.5 million in fiscal 2024.
A nearly 50% drop in net income. Wow, that's a huge hit. What does that kind of decline signal to investors or even just to us as observers?
Well, it signals a significant squeeze on their bottom line, obviously, and that can impact everything from investor confidence to their ability to fund future growth initiatives like new product development or factory expansions. This naturally led to a much lower diluted earnings per share, or EPS.
Right, the EPS.
It was $2.50 in fiscal 2025, down from $4.98 in fiscal 2024. That's a key metric for shareholders, showing how much profit the company made per outstanding share.
Big drop there, too.
And on top of that, their interest expense net rose to $180.0 million in fiscal 2025. That was up from $135.8 million in fiscal 2024, primarily driven by lower capitalized interest and just increased borrowings. And it's worth noting they carry substantial debt, approximately $4.1 billion as of May 25, 2025.
Wow, those are some stark declines in profit and increasing debt. But was it all bad news financially? Were there any bright spots or areas of resilience?
Not entirely bad, no. Despite the significant headwinds impacting profitability, their cash flow from operations remained quite strong, actually. They generated a robust $868.3 million in cash from operations in fiscal 2025.
Okay, that's still pretty healthy cash flow.
Very. It indicates they're still very effective at converting their core business activities into cash, even when profits are challenged. They also maintain solid liquidity. They were holding about $70.7 million in cash and had approximately $1.2 billion available under the revolving credit facility.
So they have access to funds if needed.
Exactly. So while profitability definitely took a hit, their underlying cash generation and ability to access capital remain robust. It provides them with flexibility to navigate these challenging times.
That strong cash flow is definitely a critical point of strength. It's a powerful reminder, isn't it? That even for established global companies like Lamb Weston, major economic shifts, supply chain disruptions, unforeseen incidents, they can deeply impact profitability and make strategic cost management, efficient operations, and, well, having a robust financial safety net absolutely critical for survival and long-term health. Okay, so beyond the purely financial balance sheet, the filing also touches on broader issues that affect any major global corporation: regulation, environmental impact, and their public image and workforce. What can we learn about those less visible but equally vital aspects of Lamb Weston's business?
Yeah, these are increasingly vital areas for any large publicly traded company, especially in the food sector. You really can't ignore them. Lamb Weston operates within an incredibly extensive and complex regulatory environment, just layers upon layers. They must adhere to regulations from agencies like the FDA, the Food, Drug, and Cosmetic Act, the Food Safety Modernization Act, the Nutrition Label Reform Act.
All the big ones.
All the big ones. And beyond that, they face stringent EPA regulations regarding environmental compliance. These regulations govern basically everything from their manufacturing processes and food safety standards to how they label their products and manage waste.
And are there significant costs associated with navigating this regulatory maze, especially on the environmental front? I imagine so.
Absolutely. The environmental compliance costs alone are substantial. The 10K explicitly states they expect to spend approximately $100 million just in fiscal 2026, primarily on wastewater treatment at their production facilities.
100 million in 1 year on wastewater.
Yep. And looking further out, they anticipate an aggregate of $500 million, $500 million over the next 6 years to comply with government environmental regulations and permit limitations.
$500 million, that's massive capital expenditure.
It is. And it's not just about compliance with existing rules.
Right.
It's directly connected to the inherent risks posed by climate change on their core raw material. Potatoes. Think about potato crop performance and water availability. Are we seeing increased droughts in Idaho? More unpredictable frost patterns in the Netherlands? New pest challenges?
Right, it affects their basic supply.
Exactly. How is Lamb Weston adapting its agricultural practices in response? These factors make proactive environmental management not just a regulatory burden, but a core business imperative for them.
That really shows how many layers there are to running a global food business, from navigating potato fields vulnerable to climate change, all the way to complex government regulations. It's a very complex dance.
It truly is. The filing also emphasizes their focus on human capital. They employ around 10,100 people globally, and they highlight their commitment to health and safety, striving for a zero-incident culture.
Which is important for productivity, too.
Absolutely. It isn't just good PR. It's crucial for productivity and avoiding costly workplace injuries or legal issues. And, of course, their intellectual property, including key trademarks like Lamb Weston stealth fries, those fries that stay crispy longer.
Yeah, the stealth fries.
And licensed brands like Grown in Idaho. These are materially important to their business. These brand assets differentiate them and are core to their market value.
And one final detail that caught my eye, their independent auditors, KPMG LLP, highlighted a critical audit matter regarding their finished goods inventory. Can you quickly explain what that means and why it's notable?
Yes, sure. A critical audit matter, or CAM, it's essentially an area the auditors found particularly challenging, complex, or maybe risky to verify during their audit. In this case, it was regarding the sufficiency of audit evidence for finished goods inventory held at third-party warehouse locations.
Okay, so proving the inventory exists at places they don't own.
Basically, yes. It just means that because Lamb Weston uses so many external warehouses, it's more complex for the auditors to confirm the existence and valuation of those inventories than if everything was sitting in Lamb Weston's own facilities. It's a technical note, sure, but it illustrates the sheer logistical and financial verification complexities involved in running such a large, globally dispersed operation.
Understanding these less visible, often technical parts of the business really gives you a much richer and more nuanced picture of how external factors like climate change, regulatory pressures, digital security, and even audit complexities are directly shaping the corporate world. What a deep dive into Lamb Weston's recent year. We've truly seen a company navigating significant cost pressures from raw materials and logistics, dealing with the tightness of the labor market, managing complex technology transitions like their ERP system, and facing intense global competition. Yet, through strategic restructuring, new cost-saving initiatives, and that strong cash flow generation, they're working relentlessly to adapt to a challenging and, well, unpredictable global environment.
Absolutely. Lamb Weston's 10K provides a really compelling microcosm of resilience in a volatile world. And this raises an important question, I think, for us all to consider. What does the future truly hold for global food producers like Lamb Weston as they balance ever-increasing consumer demand, growing environmental pressures, and the relentless drive for efficiency in an increasingly interconnected and complex global economy? It's a fascinating challenge to watch unfold.
It was a Revenue Radio podcast. Thank you for watching. Please like, subscribe, and hit the bell to stay updated with our latest analyses.